morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at two sectors, the conglomerate sector as well as the trading sector, and we're talking today about Grace Kennedy Ltd. As well as Agostini Ltd. Now, both companies would have reported pretty impressive results at the half-year and 9-month period, respectively, of their fiscal reporting periods. Let's take a look at how both companies would have fared and what investors might expect ahead. Turning firstly to Grace Kennedy Corporation Limited, we see that the company or the group would have delivered a diluted earnings per share figure of just around 16.1 cents TT dollar equivalent compared to the 12.3 cents in the prior comparable period of fiscal 2020, a 30% increase. So quite a nice improvement there. Revenues were up just around 12% from 2.5 to 2.8 billion TT dollar equivalent. There was a decline in net impairment losses, which would have impacted earnings for the prior comparable period from 22 million to 10.3 million. So that's good news there. Other income fairly flat, profit before taxes up just around 20.4%, and profit attributable to shareholders increasing that 30% from 122 million to 160 million TT equivalent. When we take a look at Grace Kennedy's profit before taxes by segment, there were pretty good improvements right across the board. Their two largest segments, food trading and money services, performed quite commendably. Food trading, as a matter of fact, in that yellow segment, increased a whopping 50% from 83 million TT dollar equivalent in terms of profit before tax to 125 million. That money services also improved an impressive 15% from 81 million TT equivalent to 94 million. There was also improvement in the banking and investments segment from 12 to 16 million, a 33% odd increase. However, that's one of the smaller segments, and that insurance services segment also improved just modestly from 22 to 23 million. Now, very good improvements in terms of earnings growth for the group. However, its stock price has been the talk of the town, particularly on a year-to-date basis, and that has actually outpaced its earnings growth. And we can see that being reflected in Grace Kennedy's price earnings ratio versus the sector average. Now, basically, this is a measure of how cheap or expensive a stock is relative to its peers, and we can see that Grace Kennedy in that fuchsia color or pink color, its price earnings ratio has expanded from around 13.8 times, so that around that 13 time level historically, to its current level of around 20.2 times as traded on the Trinidad and Tobago Stock Exchange. And historically, it has been fairly in line with that sector average in green of around that 13.5 to 14 and a half times. That sector average has actually also expanded to 16.1 times. But when we take a look, it certainly would appear that Grace Kennedy its stock price growth has certainly outpaced that of the sector average in terms of a valuation perspective. So at a price of $6.25, Grace Kennedy on the Trinidad and Tobago Stock Exchange is trading at a price earnings ratio of just around 20.2 times. Again, well above that sector average of 16.1 times, with very rapid growth in Grace's stock price on a year-to-date basis. Its dividend yield is 1.3%, again below that sector average of 2.5%. So certainly investors are betting on Grace, or holding Grace rather, more for its growth potential in terms of price as opposed to its dividend yield. For now, resilient segment performance has been one of the key highlights for Grace. Rising food costs could cut into that food trading business in subsequent periods. The company has acknowledged that there have been increases in logistical costs, etc. The company also continues with its acquisition pipeline, and most recently would have announced the acquisition of Scotia's Eastern Caribbean Services, or Insurance Services, to be rebranded, and that would have been announced in early August. But again, with that overtone of sluggish economic recovery across the entire Caribbean, Bourse is going to maintain a neutral rating on Grace for the time being. Turning quickly to Agostini Ltd, and for the 9-month period ended June 2021, the group would have recorded an earnings per share figure of $1.49, which is a very commendable 15% increase from the $1.30 per share in the prior comparable period. Revenues up just marginally 2.6%. Operating profits, however, did increase a very significant 17.1% from 197 to 231 million, and profit attributable to shareholders all the way at the bottom of this graph increased that 15.2% from 89.7 to 103.3 million. When we take a look at revenues by segment, very good performance across the board, with the exception of that little pink sliver industrial construction and holding segment. In terms of their fast-moving consumer goods, we would have noted a 40% increase from 79 million in the 9-month period of 2020 to 110 million in that 9-month period of 2021. Just around a 7.5% to 8% increase in the pharma and healthcare segment from 91 million to just around 98 million. The rate of growth has slowed just a bit with some normalization in terms of the COVID environment. However, there was still net growth in that particular segment on a revenue basis. Now, one of the good trends for the Agostini Group has been that increase in profitability, and we can see based on their operating margins, there has been a very nice upward trend over the past couple of comparable periods, moving from 6.9% in terms of operating margin to 8.6%, and that profit before tax margin also increasing from 6.1% in that orange column all the way up to 7.8% with consistent improvement over the past couple of periods, as mentioned, meaning that the group is getting more and more efficient in terms of translating every dollar of revenue into profits for its shareholders. So at a price of $24.40, Agostini is trading at a 12.1 times price to earnings ratio, above its sector average of 8.3 times, with a dividend yield of 3.3%, just about in line with that dividend yield of 3.1% for the sector. Now, on the basis of improving margins, again, conditioned by that economic uncertainty, but with its acquisition pipeline very much active, with the recent acquisition of Oscar Francois and a couple of the related pharmaceutical groups, Bourse is going to maintain a neutral rating on Agostini for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, and check out our website at bourseinvestment.com. And of course, you can catch us in today's business section of the Bigger, Better Trinidad Guardian newspaper. Stay safe, get vaccinated. See you next time on the Bourse Report. Have a great week ahead.